After years of speculation and shifting corporate strategy, Tesla's CEO has finally addressed lingering questions about the company's decision to relocate critical operations away from California. His comments have sparked fresh debate about innovation, taxation, state competitiveness, and Tesla's future direction. This is the definitive breakdown. For nearly 2 decades, Tesla Inc. and its CEO, Elon Musk, were flagship symbols of California innovation, synonymous with Silicon Valley disruption, electric vehicles, and high-growth tech manufacturing. But over recent years, that narrative has shifted dramatically as Tesla's corporate and leadership footprint moved outward from the Golden State. In 2024 and 2025, Tesla faced intense scrutiny due to a series of executive departures, strategic relocations, and broader questions about where the company sees its future. The spotlight returned to Musk when he finally broke his silence on Tesla's departure from California, offering the most detailed explanation yet of the company's decisions and vision. Today's discussion will break down what Tesla's California exit actually means, why Musk chose to speak out now, how this reflects broader business trends, the implications for Tesla, California, and the auto industry. Tesla's corporate shift. Tesla's formal departure from California began years ago, not as a sudden move, but as a strategic relocation of its corporate headquarters to Austin, Texas. A shift Musk previously confirmed was driven by both operational considerations and broader climate in California. From a practical standpoint, Tesla's Fremont assembly plant remains one of its core manufacturing hubs. However, the corporate head office, major administrative functions, and emerging product leadership teams now operate mainly out of Texas, where Tesla's expansive Gigafactory Texas serves as both a manufacturing and corporate center. Musk's retreat from California was not abrupt. He had long expressed frustrations with regulatory and operational hurdles in the state. For example, during the pandemic, Musk openly challenged local health measures and threatened to move operations out of California if the business environment did not change. Critics noted that high costs of living, taxation, and regulatory complexity were core motivations for the move. But others pointed out that even as Tesla relocated executive functions, production and jobs in California did not disappear immediately. The executive exodus and its signals. Part of the broader context for Musk's comments is a wave of high-profile executive departures at Tesla. In mid-2025, a senior executive and Musk confidant, Omiyad Afshar, left the company amid internal restructuring and slowing global demand. Afshar, a key leader overseeing sales and manufacturing across multiple regions, represented continuity and technical leadership. His departure, along with other senior exits, heightened questions about stability within Tesla's leadership ranks and pressured public perception, both among investors and observers. Musk's recent silence and eventual public remarks appear partly aimed at addressing concerns about corporate direction, leadership continuity, and what Tesla's relocation decisions mean for the company's long-term trajectory, what Musk actually said and why it matters. When Tesla's CEO finally addressed the high-profile exit from California, his comments reflected a broader defense of strategic business decisions. Operational efficiency. Tesla's shift of key executive functions to Texas and other locations aligns with where the company's growth engines are strongest. Regulatory and tax competitiveness. He reiterated that business environments with more favorable regulatory frameworks and lower tax burdens enable Tesla to invest more in innovation and product development, particularly in areas like artificial intelligence and electric vehicle infrastructure. Commitment to innovation. First, Musk framed the move not as abandonment, but as a strategic bet on positioning Tesla where it can build and scale the technologies of the future, robo-taxis, energy storage, and autonomous systems, without the constraints he perceives in California. His comments did not dismiss California outright. Rather, they underscored an ongoing tension between the state's historic role as a tech hub and the evolving needs of rapidly scaling companies. Business migration and state competitiveness. Tesla's story mirrors a larger pattern. California has experienced net outflows of corporate headquarters and major operations over the last decade. Data show that between 2015 and 2025, the state had one of the highest net outflows of domestic companies. Texas, Florida, Tennessee, and North Carolina have emerged as beneficiaries for relocations, offering lower taxes, fewer regulatory layers, and incentives that appeal to executives and boards. Tesla is among several high-profile names to shift major functions out of California, alongside others that have cited operational costs and regulatory environments among reasons for relocation. However, economists also caution that not all departures equate to lost influence. Some corporations retain significant employment and investment in California despite relocating headquarters, and new startups continue to emerge within the state. California's innovation ecosystem, particularly in sectors like artificial intelligence, entertainment tech, and biotech, remains globally competitive. Musk's exit, while symbolically significant, does not eliminate Tesla's presence in California entirely. Fremont continues as a production hub, and the state still contributes to the company's workforce and output. Investor and market reaction. The markets have reacted in varied ways to Tesla's leadership and strategic shifts. In 2025, Tesla's stock performance showed volatility tied not only to production and delivery numbers, but also to investor confidence in leadership and succession planning. Corporate governance experts have openly debated Tesla's leadership structure, particularly concerning Musk's influence and compensation, highlighting concerns over dependency on a single leader. Tesla's strategic narrative now focuses on expansion into autonomous taxis, energy solutions, and robotics. The success of these pivots may ultimately shape whether the geographic relocation is seen as foresighted or controversial. What this means for California. From a state perspective, losing a high-profile CEO resident and corporate headquarters brings political and economic discourse into sharp relief. Entrepreneurs and investors warn of a deeper fiscal issue tied to corporate migration. Some estimates suggest that continued exits could cost California tens of billions in tax revenue, even as the state debates policies to retain businesses. Yet state officials counter that relocation headlines do not always equate to net losses in jobs or innovation. Many relocated companies continue to employ California workers, and new firms are founded each year. Still, the narrative of a business exodus has taken on political and economic weight, raising questions about taxation, regulation, and competitiveness. The future for Tesla and California. Elon Musk's decision to break his silence on Tesla's exit from California provides clarity on corporate priorities and strategic thinking. It also highlights larger themes in the modern U.S. economy, where innovation thrives, how cities and states compete for capital, and how global leaders in emerging technologies make critical decisions about location, workforce, and growth. Tesla's story is still unfolding. Its factories continue to produce electric vehicles in California, even as the corporate headquarters has moved. Future success in areas such as autonomous vehicles, energy solutions, and robotics will influence whether this relocation becomes a footnote or a defining chapter in Tesla's history. For California, the challenge will be balancing regulation, taxation, and innovation to remain a competitive home for the next generation of industry leaders.